talk about the Nigerian economy and how events that happened this week and how it has affected both businesses and individuals. So this week we have seen some significant developments in the Nigerian economy. Now let's get into perspective and unpack what this means for businesses and consumers. First up, the Naira depreciation. Now, the Naira has been under pressure, depreciating against major currencies such as the dollars, the pound sterling, and the euro. Now, this can be attributed to several factors, including global oil prices, fluctuations, and rising domestic inflation, which has also influenced the Naira. So a weaker Naira can make imports more expensive, which can lead to increase in prices for consumers, especially for goods that are imported into the country. Now, another issue that was trending this week was the recent MPR raise, an increase in the interest rate. So in a response to inflationary pressures by the Central Bank of Nigeria, they raised the interest rates to 26.25%. Now, this is a common tool used to curb inflation by making borrowing more expensive and encouraging saving. While this might help stabilize prices in the long run, it could also dampen economic activity in the short term. So my guest and I will discuss whether this was a good decision taken by the Central Bank of Nigeria and how it affects everything, both businesses and individuals, and what this means for the common man. And now inflation, according to the National Bureau of Statistics, inflation right now is at 33% and food inflation is at 40%. Now the rising cost of living puts pressure on household budgets, and this can erode business profit margins. Now, the Central Bank of Nigeria's interest rate hike is aimed at addressing inflation, but it remains to be seen how effective this will be. So this morning, my guest and I will discuss these issues and more after this very short break, because he's joining us virtually. So his name is Gbolahan Olojede. He's a financial expert. So, Gbolahan Olojede, are you here with us?
Yeah, good morning.
Good morning. Can you hear me? Welcome to Market Insights. It's great to have you on the program this morning. So, Mr. Gbolahan Olojede is a financial expert, and he's going to be discussing these issues that trended this week. So, first up, let's talk about the hike in the interest rates recently that was increased by the Central Bank of Nigeria Monetary Policy Committee. So they have increased the interest rate to 26%. Now, looking at the current situation in the economy, do you think this was a good decision to make right now?
Well, I'm not sure if good or bad is the right description that we can get away with. I think more or less it is, does he have an option than to increase that rate? And considering the fact that nothing much seems to be happening to support that process from the fiscal side, I don't think that the CBN has an option than to, try to maintain the monetary, the tightened monetary policy that it has embarked upon. Like you said in your intro, this is a tool that is available to central banks across the world, and they deploy it to tame inflation. When you trace how this has happened globally, take the developed markets, for example. After 2020, because of the heavy stimulus that was pumped into the economy, inflationary pressure emerged. And this was further complicated by the Russia-Ukraine war, which created a lot of energy and food problems for the entire globe. So inflation surged globally. It wasn't just a Nigerian affair. So how did the central banks in the developed market, how did they respond? They responded by tightening the monetary policy. So if you see the curve of how the developed markets responded, you see that there was a synchronized tightening of monetary policy. Everybody started to tighten. Then you see the plot going up. And then as soon as inflation plateaued, then the tightening also stopped. So inflation has started to go down in those markets, and the central banks in those markets have also started to relax, though in a divergent manner, the monetary policy tightening. However, Our own case appears to be a little different from what has happened or what led developed markets to their own action. Our own inflation is not just being driven by things that monetary policy alone can control. So that is why it will take a very long time for the monetary policy. If we're waiting only for monetary policy to moderate inflation, it's going to be a very long journey. As a matter of fact, at some point, it will become counterproductive and we will start to receive the negative version from continuous tightening of the monetary policy. So the expectation is that there will be more activities to support the effort of the monetary authority to ensure that we can get inflation to inflect.
Okay. So we anticipate more activities around this, using this tool called the interest rate to actually curb inflation. Okay, but in your view, do you think this is going to strengthen our Naira so far?
Well, it should encourage more people to want to come into the market, and some of the people that will come into the market might also be bringing foreign money, foreign exchange. So it might help. But you see, the issue is not what we are running after, we should be chasing. It's not some temporary gains or temporary reduction in volatility. It is sustainability. So whatever we want to do, we should not target a temporary effect on either the exchange rate or the inflation. It should be something sustainable. And for us to have something sustainable, it will not be delivered solely by the tightening of monetary policy. As a matter of fact, as we continue to tighten this monetary policy, we end up slowing down the economy, the growth in the economy. That will affect existing obligations. It will impact issues of loan default. It will eventually start to impact the loan write-offs at the bank. So it will be counterproductive if extended for too long. So the right approach would be for us to be able to get the fiscal side of things to support this initiative in a coordinated manner so that we can get out of this problem as early as possible.
Okay, but we're still on this same topic. Yes, I understand what you are saying now. Do you think the Central Bank of Nigeria should have implemented alternative measures to address inflation besides raising the interest rates?
What would that alternative measure be? That is the question. You see, most of the things that could have helped are not in the hands of the central bank. The central bank's tool towards this fight is the interest rate which it is trying to deploy. But like we have seen, if you look at how long we've been raising MPR, we started since 2022. 2022, 2023, 2024, inflation has refused to reach an inflection point. So obviously, it's going to be a long journey. But like the CBN governor himself said, is that the tool that is available to him. That is what he has done. So let's call on the fiscal side to sit down with the monetary people, find how we can synchronize our approach and deal with this matter in a cohesive manner.
Okay. But so far with this tool that they have used to implement this, if you have noticed, it hasn't really affected inflation. It hasn't really brought down. Yes, in the past they might say, oh yes, it helped. As of a few weeks back, there was the trading for the Naira against the dollar. It was at 1,100 Naira against the dollar, and today we're talking about 1,500 Naira to $1. So it seems to be fluctuating, if I'm allowed to use that word. It keeps for 1 minute it looks like everything is better, and the next minute temporarily everything is back to high prices every now and then. So but how can, if you could recommend a solution, an alternative that could successively curb inflation in our economy? Something, yes, we don't want something temporary that would, after a few days, it will come back again. Something more permanent.
Okay. There are certain things we can do. If you look at the inflation plot of Nigeria, there's a particular plot that I like and is on the CBN website. When you look at that plot, you see food inflation, then you see all items. When you look at those two curves and you compare them, you will see that the kink on the curve of food inflation is the exact point where you have the kink on the all item inflation. And when you see the two curves, they tend to bend together. So the core message in that core, in those curves, is that the food inflation is a major driver of the all item inflation. So if we deal with food inflation, I'm not saying that dealing with food inflation is a pretty straightforward, plain vanilla thing. No. But it is for us, having identified that food inflation is a major driver of that headline inflation, we sit down and then discuss, how do we tackle this food inflation? What is causing it? What can we do? From the issue of production in itself, how do we support the farmers to be able to produce? You give them the fertilizers, the improved seedlings, the farming practices, using the extension workers for education and all of that, and you ensure that security circumstances are improved so that people feel comfortable to go, farmers feel comfortable to go to those farms and produce. After we have produced, we have to talk about issues of storage, value addition, issues of moving food from the centers of production through those rural roads that are practically collapsed onto the centers of consumption. So it's a cocktail of affairs around dealing with food inflation. But having identified that this is a major issue, we now need to sit down and confront it. I, as a person, used to do some little farming with my partner, and we're doing it somewhere in the middle belt. Just about 2 or 3 weeks ago, he sent me a message that I had to leave the location where we were farming because there were attacks. People were marching cows onto the farms and people were getting attacked. So he left. And I can assure you, he's not the only one that left. So deal with food inflation, and it's an easier way to get to destination in which we can inflect our inflation curve and breathe easy thereafter.
Okay, well said. Yes, food inflation. And apart from that, our fiscal policy, our fiscal infrastructure in Nigeria, the roads, as you know, most traders have complained about that because of transportation issues, having to bring their goods, the food items from the farm to the markets, that the roads are bad and they have to pay extra cost for the bad roads. So I think that's an issue that also needs to be looked into, this infrastructure in our country, because it's also increasing, it leads to an increase in the price of food items, and that's part of what causes our food inflation. So what are your thoughts on this, Mr. Gbolahan?
You're right on the money. It is correct. Part of what I also mentioned earlier was moving goods from centers of production to centers of consumption. So there are this massive farm in some bush somewhere, maybe in the middle belt or in some parts of the north, where they do more of the farming anyway, and they have to move it to the south. And getting those rural roads to be good enough for them to move these goods, and then to move them even from the north to the south, all these things are areas where we can have some elements of an intervention. Apart from food inflation, there's also the energy issue. And it's another area where there could be certain intervention. I'll give you an example. We've been talking about CNG since the removal of subsidy. But I don't think, in my opinion, that the speed with which we're moving with this CNG project is good enough. I don't think it is good. I think we can do better. I think we can move faster so that we can also lower the energy cost. If energy cost is high, if transportation cost is high, all these things have a way of impacting the inflation that we're talking about.
I wanted to discuss with you the current regulations that were imposed by the Central Bank of Nigeria on BDC operators. Now they are required to register, and also they divided them into two tiers, and they've also shared out a capital base for tier A and tier B, just to have more regulations on BDC operators in the country. So do you think this will also help in our foreign exchange rates, what they have done? Because I know some BDC operators have registered. And then what about those BDC operators who have not yet registered but are still trading? Like, how would the Central Bank of Nigeria be able to apply punitive measures on such people?
Okay, thank you. The guidelines that were rolled out address both existing BDCs and new ones. It was a smart move to consolidate the industry, or that segment of the financial services industry, because we're now moving from a capital requirement of 35 million to a minimum capital requirement of 500 million. That is what is required for a tier 2 BDC. And if you're a tier 1, you go all the way to 1 billion from 35 million. So automatically, all the mushroom BDC that are all over the place are forced to shape up. You either consolidate or you get out of the business entirely. So I think that is a move to sanitize that space and to be able to improve supervision, regulatory supervision on the industry. It is easier to supervise maybe 200 players than 4,000. When you have 4,000 BDCs, everybody is a BDC. Some people even have 2, 3 BDCs, and all of them are just in some portfolio somewhere there. That is not how to run a serious segment of our financial services such as BDC. So it's a commendable step, and it may not deliver the immediate. If anybody is looking for, oh, there will be an immediate impact on exchange rate, no. That is not what it will deliver. But over time, there is a 6-month window within which all these things are meant to happen, and we can begin to also see a more sanitized environment that will tame the various sabotage and improper behavior that are in that space right now, including some that are outright crime. It will help to deal with some of those matters. So bravo to the CBN for this, and let's see how it goes.
Okay, but those still on the BDC people, the BDC operators, now those who have not yet registered, because you know there are still these people, you could find them at specific places. For example, in Lagos, they stay at specific junctions and bus stops, and those who have not yet registered and are still trading because they walk about on the roads. Now, how can these punitive measures be applied on such people? Because is the central bank going to implement a committee to actually restrict such people from trading, or they're just going to cut them off the market completely? What are your thoughts on this?
Those are not BDCs, first, and I think it's important to say that. They're just individual traders who somehow, somewhere, are able to lay their hands on this foreign exchange and they trade it. They're also not within what these guidelines applies to. However, it will come across to me as a strange phenomenon that there are so many of them that are everywhere. I know there have been a few issues of arrest recently in Lagos, Abuja, Port Harcourt, and Kano of some of these people. But you see, we must go to the root of why they are even there in the first place. If in some other parts of the world you can even walk into a bank and change currency, why can't I do that here in Nigeria? So what gave birth to all those people mustering at specific markets all around Lagos and in other parts of Nigeria are issues that we must address. I believe that the CBN are working with law enforcement agents. We work out a plan on how to either organize or deal with the matters, the specific matters you have referred to. But to be frank, they are not within the guidelines that the CBN has released. They are not BDC. Some of them are not even registered enterprises. They are just individuals who are doing buying and selling on their own. Should a nation's currency be traded in such manner? My answer will be no.
Okay, well said. Okay, now looking at the long term, the future. Now, what is the long-term outlook for the Nigerian economy, considering these recent developments?
The interesting thing about outlook for Nigerian economy is that no matter which statistic you lay hands on, it says that the GDP will grow over the next 3 years. Whether it is World Bank or IMF or Statista or Nigerian Bureau of Statistics, any data now that you lay your hands on will tell you that Nigeria's GDP will grow over the next 3 years. So, judging from that, what we now need to do is to build the support structure to ensure that even when the projections have said we will grow by 3%, can we shoot for 4? Can we shoot for 5? What do we need to do to be able to do that? Issues of economic distortions and avoidable wastage. If you come to the energy sector, for example, and you see the fact that we have kept on promising PMS year in, year out, 1 month after the other. Oh, it will be September. Oh, it will be January. Oh, it will be... Okay, when are we going to get to the final bus stop for that? Knowing fully well that PMS is one thing that our hard-earned foreign exchange goes into on a continuous basis. If we start to produce that product here, we know that we will be able to save foreign exchange. We will also be able to produce more than we can consume and export. When we export, we earn foreign exchange. Why don't we deliver on those kind of things? It will help us to achieve those growth that have been mentioned by almost all the statistics. Maybe we can even do beyond that. Also, other initiatives that are on the table, we need to move fast on them. We need to step them out of the pages of newspapers, out of speeches. Take them out of the speaking into the place of doing. We have spoken enough. We have analyzed enough. There must be more activity in execution, bringing those things to happen for us and count for Nigeria.
Okay. Thank you very much, Mr. Gbolahan Olojede. It was a pleasure having you on the program this morning, and we look forward to having you again on Market Insights.
Thanks for having me. Have a beautiful day.
Now let's look at the money market figures this morning. So for today being Friday, we're going to look at how the dollar, we focus only on the dollar rate, how it's selling from Monday to Friday. And we focus only on the Central Bank of Nigeria rate. So on Monday, the dollar was selling for 1,313 Naira to $1. On Tuesday, it's the same figure, 1,313 Naira to $1. And on Wednesday, it's 1,396 Naira to $1. On Thursday, the price reduced to 1,300 Naira to $1. And on Friday, it's moved up again to 1,313 Naira to $1. So those are the dollar rates for this week from Monday to Friday. Thank you so much for watching Market Insights this morning as I discussed with my guest, Mr. Steve Okafor and Mr. Gbolahan Olojede, as we discussed the issues in the economy and things to look out for. And like Mr. Gbolahan said, we need to actually we've done enough talking in the country. Let's start putting in the action. We've done enough writing and talking about how to make things better in our economy. Let's now put it into practice and let's all see more action that can directly affect the common man on the street. So thank you so much for watching Market Insights.